I was really annoyed that we are building this new kind of financial system and yet we're not using it. Crypto companies have historically had trouble getting bank accounts. We have these Telegram support groups trying to figure out which banks will even talk to you.
It's 10 years from now. It's 2035. Are stablecoins running through the rails of the economy? Payroll or sending money overseas, buy some coffee?
Yeah, I think unquestionably, yes.
This episode is brought to you by Uphold, which is a great crypto platform that makes it easy to buy, sell, and stake crypto assets. Uphold has over 300 plus cryptocurrencies, including Bitcoin and all the top altcoins, and they offer a crypto staking on over 19 crypto assets. I've been a user of the platform for many years. They are safe and reliable. They don't commingle or lend out your crypto funds, and they are 100% reserved. You can review their transparency report. Uphold also offers an amazing rewards program where you can earn up to 5.25% on stablecoins. This rewards program also allows you to get 24-hour early access to new tokens that they list. And to participate, you just simply have to open the app once per month, deposit $50 once per month, and trade $50 once per month. And the stablecoins that they support includes Ripple's RLUSD. You can earn up to 5% on that stablecoin and 5.25% on USBC. So if you'd like to learn more about Uphold and all the great services they offer, visit the link in the description.
Hey folks, welcome into the Thinking Crypto podcast. I'm your host, Tony Edward, and joining me is Megan Knab, who is the founder and CEO of Franklin. Megan, great to have you.
Great to be here.
Megan, I'm excited to learn more about Franklin and all the great solutions you're building for businesses to handle their finances both on and off chain. As we've seen crypto adoption continue to grow, stablecoin legislation has passed into law. So I think it's very timely I'm chatting with you, but let's kick it off with your background. Tell us a bit about yourself, where you're from, and your professional background.
Yeah, sure. Well, thanks again for having me. Excited to chat. Background, native New Yorker. Lived in New York most of my life. I ended up getting into crypto actually sort of by being a New Yorker. In my early 20s, I was living in Bushwick, Brooklyn with a zillion roommates. I was working on Wall Street, going to business school at night. I would spend my weekends doing my grad school homework in a cafe in Bushwick that happened to be the Swallow Cafe, which was right below the Consensys office, which Consensys was a early venture product studio in the Ethereum space back in 2016, and happened to just meet some people that worked there and got hooked on crypto for a lot of different reasons, but one of them was proximity. So that's a very quick background on myself. I'm a classically trained accountant, worked as a staff accountant for a couple of years, and really got excited about the Ethereum space specifically initially as a way to create open source accounting standards. And so have been doing a bunch of wonky accounting technology kind of initiatives since then.
You know what? As you were talking about being in Bushwick, at one point, I think it was 2016, I was living in Bushwick temporarily as my wife and I were transitioning to move to Jersey to Hoboken. So at some
Neighbors.
point, yeah, we
Yeah.
may have crossed paths, not knowing each other, but it's so funny how the world works. And and then we were in Brooklyn Heights for a while as well. You mentioned Consensys and the folks at Ethereum, and they're based in Brooklyn and been building for years. So it's so amazing how things have changed from a small startup, small industry to now this huge financial movement and new asset class. So amazing.
Yeah. Looking at things in retrospect, it is shocking how much has happened in less than a decade. I went to the Consensys offices in Bushwick actually a couple months ago for the first time in a long time. And it's funny, a lot of it's still the same, but so much is the context is all different. So certainly a thrilling industry to be in and wouldn't want to be anywhere else.
Absolutely. So tell us about what led to the founding of Franklin. Where did the idea come from?
Yeah. So Franklin it was sort of just born out of frustration that I had personally doing accounting for Web3 companies. It's my second startup. After my last startup ended, I spent some time consulting, doing basically just like fractional CFO services for different startups in the Web3 space. And something that I noticed was all these companies are using the same kind of TradFi stack to build their businesses that, every other startup outside of crypto is using. And I was so frustrated by that. And I was really annoyed that like we are building this new kind of financial system and yet we're not using it. So yeah, born out of frustration. And so, had a little bit of a background doing startup-y things myself and started prototyping Franklin within a company that I was working at called Serotonin, which is a Web3 marketing studio as well as a venture product studio. Kind of like, second generation. A lot of people that worked at Consensys were working at Serotonin. So it was like very easy for me to land there. But as the person running finance and, trying to help guide some of the strategy and how can we differentiate ourselves in market and how can we attract like the top Web3 talent to come and work with us was, how do we start using this technology for ourselves internally? What pieces of financial operations could we bring on chain? We had a lot of issues with managing payroll. We had, when I got there were 10 people. We grew it to over 60 people all around the world. The pandemic happened. Everybody moved to or was initially doing remote working. So it seemed like a really good use case to figure out like how can we enable this borderless, permissionless technology on our balance sheet. So prototyped it within Serotonin, and then kind of before I knew it, we were spinning out, raising around, getting our first customers, hiring our team. Yeah, kind of a whirlwind moment.
That's awesome, and congrats. And it's kind of the true entrepreneur's journey. You found a problem and you wanted to build a solution, and obviously you were very frustrated by that problem. So that's really cool. Now, break down the different services and solutions you offer for those who may not be familiar with the whole payroll setup and how finances work on the back end for businesses and how you're integrating crypto there.
Yeah. So I think when you're looking to hire your first employee into a business, there's like a very steep learning curve, especially when you're operating in the United States. There are a lot of labor regulations. There are a lot of tax nuances depending on where you operate. And the thing about like being in the US is every state kind of acts like its own country in a lot of ways. So you have a lot of administrative overhead. So there's some level of like, how do we make this administrative overhead attainable and put it into these bite-sized pieces for companies that are just getting started? 3 years ago, when I started the company, most of the businesses in the Web3 space were just like very early stage startups figuring out how to like bootstrap to get together, or they're just, getting in their first round of VC funding. So figuring out how do we go from like that 0 to 1 and help them just start doing everything above board. The next piece is, like the money movement. So crypto companies have historically had trouble getting bank accounts and being able to maintain those bank accounts. This is an area that like I have struggled with. We have these like Telegram, almost like support groups of people who work in crypto finance trying to figure out, which banks will even talk to you in the first place.
Wow.
So there was another level of like, okay, here is a set of vendors that we can create repeatable processes with so that companies can start up. And then what parts of those processes can we be moving on chain in a way that is maintaining a good user experience, making sure that you're not creating a lot of accounting overhead. And then also, it's just faster, cheaper, and also compliant from like a HR labor regulation perspective. Sometimes companies, I've seen kind of get into a tough spot where they are operating, doing a lot of things on chain, and then they have to go back and pay an outsourced accounting firm like $100,000 that they don't really have or can't really afford just to clean up their books. And so figuring out how do we make sure all of that stuff is easily kind of attainable from day one was part of our, go-to-market thesis. There are a lot of pieces, honestly, but those are some of the first ones that we kind of started trying to tackle.
So are you using primarily Ethereum to power some of these services, or are you using other blockchains, or do you have a layer 2? How's that set up?
Yeah. We launched initially actually on Polygon. We are EVM based, and the crypto side of Franklin is all non-custodial smart contracts. So, you can operate on Ethereum mainnet. You can be on their layer twos like Optimism, Arbitrum, Base, etc. We have customers across all of those chains. And it is this other just kind of like innovation in payroll tech in general, where you can actually have a non-custodial payroll product. And really, all that Franklin is doing is helping you calculate and account for the payroll, but all of the money movement sits with you and your employees or contractors or whatever. Smart contracts are awesome, and they're the base of like our crypto kind of tech stack.
So let's walk through a kind of a mock scenario here. I have the Thinking Crypto podcast business. It's a small business, but I have a video editor, I have a podcast tech, and they want to get paid in stable coins. Can Franklin help me to do that? And how would you help me to execute that?
Yeah, 100%. They can. So basically, when you sign a company up with a Franklin account, we will deploy a smart contract under the hood that sits. You can interact with it through our app. You can also interact with it outside of our app if you prefer, and if you're comfortable kind of like making on-chain smart contract calls. But basically, you get your own smart contract. Funds are never commingled with another company's smart contract or anything like that. That's another thing that's kind of unique about our architecture. And then when your workers sign up, like they sign up for any sort of payroll account or like bill.com account, they can connect a wallet. And by that kind of like connection, it ensures that you're always paying the right person every single time. We've seen crypto payments companies go through kind of like hacks or cybersecurity things by manual data entry or needing to do file uploads. This on-chain smart contract signature ensures that never is a problem. So that's roughly how it works. There are a lot of other ways it can work too. If your company only has fiat, like USD in a bank account, and you want to settle out payments in stablecoins, we can also do that. If you want to fund payroll in stablecoins and have it settle in your employee bank accounts in fiat, we can also do that.
Oh, wow.
So there are a lot of different permutations of how it can work. We do work with some companies that are really, they have absolutely nothing to do with crypto, and we are just moving stablecoins under the hood for them to have a faster payroll cycle, which is something that I'm really excited about. I think it's the future of payments tech. But yeah, there's a lot you can do.
I want to double click on what you just said there with making the payroll cycle faster, even though those folks have nothing to do with crypto. They don't even know maybe that's happening. How are you pitching that, though? Are you telling them that this is being settled or being moved with stable coins? I'm just curious, how you present that to them, given that, to your point, this is the future because people are going to be interacting with stable coins whether they know it or not.
Yeah. I mean, to be honest, and I like extremely naively, when some of these companies first found us, we were not pitching them at all. Like they had some kind of like forward-thinking bookkeeper in their back office being like, I heard we can actually run payments faster if we're using stable coins. And like they Googled us and found us, which was like very exciting to see, honestly. But yeah, I mean, there are a lot of businesses out there that have really compressed cash flows that like really put a lot of pressure on their business. We've seen an industry kind of like pop up around extracting value from those companies that are just trying to live paycheck to paycheck, so to speak. That should not be the case, So the fact that you have all these middlemen between you and your workers or you and your customers, this idea that we can be using stablecoins as a tool, as a different kind of orchestration level of USD and speed up fund flows. It can totally change business models. It can totally change compensation models. And so that's like really what we're excited about. I think like in terms of the messaging, I don't think we've cracked the right messaging for it yet. There's so much kind of like FUD, I would say, still among like the general population around crypto. I think that stablecoins have a little bit of a different narrative as of like, maybe a month ago or with the advent of like the Genius Act and it just being in the headlines more in the United States. So, it is, I think, still kind of at this level of being like a little technical finance. Like if you're talking to an accountant who has some like level of familiarity, it's an easy conversation to have to say, hey, we can move some of this on chain. There's no intermediary, like that's it. It's just you and your money, and we can help you figure out how to do that. But I would say for like the broader population, it's really not something that is easily consumable yet.
Yeah.
There are
the education aspect still needs to be done there.
Yeah, and there's something else that I think is a little insidious about the stablecoin space and the proliferation of stablecoins recently, which is a lot of these stablecoins are sitting in these walled gardens still, and they're not that different from payments networks like ACH or Swift because they're being totally custodied by banks or by other payments networks. And basically, the value add is it's helping their bottom line. And end users, actually, if you look at using stablecoins on, PayPal or some of these other Stripe, which no offense to those technologists that are building that tech, but it's a lot more expensive for the end user. And where's the innovation in that? The innovation of stablecoins is that they can be non-custodial. And I think that's something that we have to kind of keep a critical eye on as we see more of these TradFi companies starting to leverage stablecoins. Like, is it actually benefiting the end user or not?
Yeah, because a big part of it, many of them see the money Tether's making. They want to cut out that revenue. They want to have, the payouts from the treasury, holding the debt and so forth. And yes, it's backing it's in part of the reserves, but they're making a killing.
Yeah.
And that's kind of the business almost versus, hey, we want to make payments faster.
Yeah, exactly.
Two-part question. Which stablecoins are you supporting? And let's say my podcast tech wants to get paid in Bitcoin or Solana or XRP. Can you facilitate that as well?
Yeah, so we are not very prescriptive about the kinds of assets that our customers want to use. There are some limitations depending if you want to be off-ramping or on-ramping between fiat. The most popular one that our customers use by far is USDC, which is issued by Circle, that just went public this year. Some companies that have more of a global contractor base will use Tether, which is just more popular outside of the United States. The criteria that we have for supporting assets is really, we can whitelist them in our app. And then, we do a check to see, like, is it classified as a security? We cannot help or do anything in the securities realm since we're not a broker dealer, so we'll never touch that kind of stuff. Yeah, that's kind of the criteria. Most people want to use USDC. That's just like the reality of it. We do have some customers that will pay their employees in other kinds of assets. Like we have one customer that pays their team in wrapped Bitcoin. So the criteria does have to be, from a technical side, that it has to be an ERC20 token, which is something that can interact with a smart contract in an automated fashion. Some things, like, we're going to add support for Solana. We don't have it yet. Ripple. Never met anybody that wants to use Ripple. Would love to chat to anybody who does. We're really much more kind of like demand focused.
Yes.
We do have a lot of these kinds of like issuers come to us and say, hey, can you make us the preferred stablecoin or preferred asset? And the answer is always no. It's our customer's choice what they want to use. We're winding for a second, just paying people in other kinds of like assets that are not tied to a fiat currency. There are a ton of regulations around how that needs to work. And that's also one of the special sauces of Franklin, which is like, we will make sure that you are compliant with the labor regulations of your jurisdiction. So there's a lot of very interesting legal precedent for some of this kind of stuff, which goes back actually to Appalachia during the coal mining boom, where you had people working for coal mining companies that were getting paid in company certificates, and then could only use them at the company grocery store. And then you could never get out of that economy. And so, West Virginia was one of these states that actually led a lot of the modern sort of labor compensation regulations, in the 20th, now 21st centuries. So you have a lot of places say you have to be paid in a USD denominated asset. Some states will also just explicitly prohibit crypto. They have these like blanket regulations, which we just can never touch. So That's why it's also important to have like this hybrid option where it's very hard to operate 100% on chain natively right now. So having the spectrum of, of flexibility and kind of like a nicer user experience packaged up in this piece of software is, yeah, very effective.
Yeah, absolutely. I love that you guys are agnostic when it comes to the assets, but you also make sure you're following the law and, not putting your clients at risk, but making sure everything is copacetic with what they're trying to do. So that's really, really great. And you have the flexibility as well. Do you think, you being a disruptor, a startup essentially, right? And with this new awesome solution, like an ADP might come knocking your door saying, "Hey, we want to acquire you. We want to bring you into our network," or whatever it may be.
Yeah, I mean, we have talked to a lot of these large payroll companies, and there is not, I wouldn't say it's not like monopoly, but ADP is the biggest payroll processor by far. And I think, unless you're really nerdy focused on this space, they're really important for economic data. Like the Bureau of Labor Statistics has been in the news recently for a lot of political reasons, but ADP is an important indicator for like the broader economy around giving insights into private payroll data and employment trends. And that's just because they have such a massive reach. There's like they used to call them, I think, like the big four Ps or the four Ps, something like that, paychecks, Paycor, whatever. Like these guys take, the majority of the United States employees are getting paid through one of these softwares. We, are going back to kind of like what I was mentioning before. Like, I am so excited about crypto technology and have been for so long. And I'm so concerned about it getting co-opted by these like big brands that are using it to extract value. Like the real innovation of this technology and why it's interesting is it because it can foster peer-to-peer transactions. And so that's our mission. Like we do not want to become another intermediary that extracts value along like the finance chain. But that being said, like we want to also kind of have a say in how this technology gets deployed. And so, all of these companies are looking at how to use stablecoins, and if we can have a say in how they can use it to be able to facilitate peer-to-peer, non-custodial types of transactions, like we definitely want to be as part of those conversations to try and manage those outcomes. So that's what I would say there. There is like a little bit of, to be honest, like a cultural difference where you look at something like ADP and the software looks like something that was built in 1999. And working with such a legacy tech stack is really hard. But the distribution channels are very appealing. So, it's, I think, the thing that every entrepreneur thinks about, how do you get your investors a return and like, how do you think about the rest of your professional career? Certainly, yeah, those are the considerations I have.
Yeah, that makes sense. And, I most recently interviewed the EVP of digital assets and blockchain at MasterCard, and they're exactly what you're saying. They're looking at how can we leverage stablecoins, USDC or whatever it may be, to improve payments in certain corridors. And they're, you can see they're going through their R&D and trial and error. So it seems like at some point, whether it be ADP or whoever, they're going to have this moment. Okay, we need to figure out what we're doing here, or we're going to get disrupted. We're going to lose market share because with the Genius Act pass, we should see a whole bunch of new stablecoins. Banks are talking about launching stablecoins like Bank of America and much more.
Yeah.
And we'll see which ones survive. But obviously, Tether's king of the hill, USDC right behind. So it's just fascinating to see how this is all going to play out.
Yeah. 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 Super interesting. And, I have a past history working in equities brokerage, and I loved your episode with Vlad from Robinhood. Like thinking about like how digital brokers can, like the equity stack is so full of like legacy tech, and thinking of different ways to implement blockchains in those flows, I think are really effective. I think that it's tough. There's a lot of talk around tokenization of assets, which is very cool. But if these like the actual fundamental assets themselves are not living on a blockchain, a tokenized version of it is higher risk. It's almost like a marketing asset in a lot of ways. And so, but it's a great thing to experiment with. Like if we think about the earlier days of crypto, or at least the Ethereum space in 2016, the ICO boom, like it was a massive experiment. And like, I think the industry learned a lot from it. And I almost see the same thing happening in with banks, with equities brokers, with all these kinds of things. So we'll see. We'll see what the outcomes are and the lessons.
Absolutely. And hopefully, with the upcoming Clarity Act, that legislation, which covers more, obviously because it's the market structure bill, it covers DeFi and tokenization and a lot of different things. That helps to put some guardrails in place, and hopefully we don't see any major collapses or anything like that. But what would that mean for your business with having that pass into law?
Yeah, I mean, it's a good question. I think overall, having these pieces of legislation is like a massive net positive for the industry. It's almost surreal to see it happening. Just having anybody who's worked in the industry for more than 5 years, like it's wild to see it being talked about, like at the level of the White House, to see the bipartisan legislation going through Congress. As a side note, I have a maybe hot take on US politics, which is like crypto is the thing that will make Congress work again, where we have such a divided country. Like the only thing that people can agree on is crypto and regulating crypto. And, maybe that's like build some goodwill to deal with other societal issues that Congress has to work on. Aside from that, we'll see. I think like the market structure bill is important. I think one of the things that's like a fundamental issue with how the US regulates financial markets and capital markets is like it is very much like by enforcement. And this bill is not going to change that so much. And it's really like, can we have like more effective kind of enforcement agencies that really go after the bad actors? It's almost like a little bit of a political problem. Like we think about, in our recent history, like FTX was so involved in talking to regulators, and we all know what happened there. So I'm not totally confident that this bill will like really change that, but I am hopeful that it will. It's hard, I think, to look at crypto, like only the crypto legislation without like some of the other pieces that need to fall in place like across capital markets. So, I think about accreditation rules that the SEC has. I think some of those need to change as well, and that can lead to enhanced access and also better consumer protection. So there's a lot of stuff that I want to see.
Yeah. Yeah. Well said. Hard question for you. It's 10 years from now. It's 2035. Are stablecoins running through the rails of the economy from a payment standpoint, whether it be payroll or me sending you some money via an app, or I'm sending my cousin some money overseas, or I go to Starbucks and I buy some coffee? Are stablecoins running behind all these things? And initially, I guess where I get my money via payroll, it's powering the payroll, my paychecks and things like that.
Yeah, I think unquestionably, yes. We're working actually on a paper right now with some of our payments fintech friends about just the history of payments networks, ACH, Swift. We have in recent history RTP and FedNow, which have both emerged in the last couple years, and stablecoins have really come up alongside these technologies, and I think will probably usurp them entirely. I think the question is like stablecoins are going to be powering payments, no question. How will that look like? Will they be in these walled garden payments networks, like in a MasterCard payments network using a MasterCard stablecoin where, you're not really seeing it as a consumer? Or like, will you really have these more non-custodial type of fund flows? We'll see. I think like when we look at emerging economies that are like a digital base, so like areas of Africa, areas of South America, like they have had digital money, not crypto, that is peer to peer for much longer than we have had in sort of like the US, Europe, things like that. I kind of think about that, like how did that emerge? How will we see like our own version of like much more digital money kind of emerge? Yeah, we'll see, but it'll certainly be powered by stablecoins. Like what flavor of stablecoins, I'm not totally sure.
Yeah, and I'm very curious as to what that's going to look like, and to your point, which stable coins, and is it multiple stable coins, and they're all interoperable on multiple blockchains, and vendors accept these multiple stable coins? And, is it more or less account based and more wallet based where we're all self-custodying? I get my pay. It's not on a weekly basis, maybe a daily basis.
Mhm.
And then it's all in my same wallet and I could transact, kind of all in one app thing, go make my purchases, send my money. It's my bank account. I earn yield, yada, yada.
Yeah. 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 I think like will wallets like usurp accounts is a great question. I hope so. I hope so.
Yeah, that'd be so fascinating. And then, I've often, well, I shouldn't say often, I've just recently had some folks who are in the robots industry. And, we were talking about robots are not going to transact in cash. It's going to be digital currency and most likely stable coins, and they'll have their own built-in wallet. And maybe in 10 years, we'll have robots in our homes. Elon's building it. Other companies are building it. And I can say, hey, robot, whatever your name is, go to Home Depot and get me this, and it can go make the payment, and it's done in stable coins.
Yeah. I mean, 10 years from now, like if we just really zoom out, it's going to be it's going to be a crazy life, I think that one thing that, and stable coins are like a small piece of this broader sort of tech revolution that we're going through in general, where robotics is part of it. AI is obviously something that is in the news a lot, but crypto is really like perfectly suited for like AI agents to interact with, for automated technologies that are a little bit more advanced to be able to use. And I think, sometimes listening to some tech podcasts, it's kind of like, yeah, you're just going to be managing a lot of agents who are actually doing a lot of the work, the like kind of grunt work as we think about it now, that you do now. So I think that will be definitely something. I would love to have a robot like clean my house for me and like whatever, which, we have some early steps. Like I have a Roomba, I have an automated mop thing. Like they're getting there. Like will they get smarter? Like, sure. I think something else that like is worth thinking about too is just like when we have instant money, like instantly settled money, like how will that change business models? Like how will that change how we interact with our jobs, with our friends, like with our family? When you have things like Venmo and Zelle, like it seems instant, like it feels instant, but it actually creates a lot of float in the economy with cash that's getting settled between financial institutions. It creates a lot of risk. There's a lot of chargeback risk, right? That fintech companies have to, or normal financial institutions have to eat. But I think that there's just some level of like transacting will fundamentally be a different thing. And like the technology under the hood will be different, but it's like almost the social context around it will be totally different too.
It's like exciting but scary at the same time to see how all these things are going to come into fruition.
Yeah. 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 It's interesting. Like we offer much faster pay cycles. And there are payroll companies that have things called like earned wage access programs that you can get part or all of your paycheck faster for a fee. Like we do this much differently where you can just get paid what you've earned, no additional fees, things like that. But when we look at like the reporting infrastructure for it, the compliance infrastructure, like the IRS doesn't really have a way for us to report instant payments, like they're like, well, there's a calculation if you do it daily or a calculation if you do it weekly. Like there's a lot of this legacy crap that's going to have to catch up as well.
That's a great point because the government is slow. They still have outdated processes and softwares and whatever it is. Do you think eventually they are plugging into these different blockchains and these different companies and kind of like an API setup? They're getting the feed and they have eventually a software that is Web3 native, that is like a chain analysis, right? Kind of like a data and analytics. And it's aggregating everything, it's categorizing everything, and it's making it easier for them.
Yeah, I think that there's that. Like I like the tech infrastructure upgrades will be there. Something that I think is interesting is like, in the US specifically, like we're a US based company, so we're very US like, policy centric. The IRS knows how much money you make. Like we're reporting how much money you make every 2 weeks or whatever. And we go through this weird song and dance where it's like, okay, now I have to report my personal W-2 or 1099. the government already has this information. They know exactly how much you owe. You have to kind of take a guess at it. And then, it leads to this very like annoying kind of like tax season, where you wait for a refund or whatever, like things go on for years. A friend of mine just got a notice from the IRS that said he was over refunded in 2021, and now he owes them a couple $1,000. And it's just like,
It's ridiculous.
this,
Yeah.
There is a big private industry that wants to keep this kind of chaos the same because they make money off of it. These like kinds of intermediaries. The biggest one is Intuit. It's very well documented how much money they spend lobbying Congress so that they can keep TurboTax, which is one of the most popular tax software, one of the richest sort of like software revenue generating things by far. Will these private industries like co-opt this technology to like maintain their positions, or can we get the government to like want to upgrade themselves instead of relying on these kind of private sectors? I would love the latter, but it's not a question of like the tech being there. It's a question of like the willpower to implement it and to use it in a certain way, I think, in a lot of these kinds of instances.
Yeah, great point. And plus, you throw in, like you said, the lobbying, the craziness of politics, and that could hinder progress and getting these new things in place. But hopefully, we can, and sooner than later.
Yeah, I agree.
Tell us a bit about what's on your roadmap. What can we expect?
Certainly, there's some like base level of ecosystem expansion. We have been EVM based. There are other kind of ecosystems outside of Ethereum that are interesting that we see customer demand for, Solana being one of them. So I think that there's some level of that we're looking into. A lot of payroll companies right now make money not because of running payroll, but because of the added benefits that they offer workers. So your cost per unit for like an ADP customer is like $4 to $5. Not very much. Your like profit on that is even lower, like probably 50% lower, but you can make a lot more money by offering them healthcare. And then you get a kickback from the insurance brokers or companies. All that kind of stuff really bothers me. I don't like it. And so one thing that we're trying to think about fundamentally is like, how do we make companies running payroll, like how do we move that from an expense area of their P&L up to, an asset on their balance sheet? Like, can you be making money off of running payroll? You have massive treasuries at companies that are just sitting, making no money, while they're going through an extremely long fund flow process to settle payroll payments. Like faster payments also means you have a lot more opportunity to be earning money off of that. And so that's something that like we're thinking about at the corporate level. Like, how do we help companies like actually make money instead of like, be paying these massive like OPEX expenses? And we have like a couple different theories about how to do that. We did just release a yield product where companies that have stablecoins sitting in smart treasuries could be earning yield through different DeFi protocols. Yeah, it's really kind of like, how do we sort of try and bring about a business model shift and really stay true to this kind of value of not being like an extractor along the way. So that's kind of where my mind is at.
That's great. I really love the DeFi component you mentioned. If the companies have, whether it be stablecoins sitting there, they can put it to work and earn.
Yeah.
That's really great.
Yeah. And it's palatable for a certain type of customer. Other types of customers, like, don't have that kind of risk tolerance, which is completely understandable. And so what can we do for them too? And there are a lot more options now. So yeah, so that's all under development.
Great stuff. All right. I got some wrap-up questions here for you, Megan. First, if you could create your own metaverse, what would the theme be?
It would probably be like garden themed. I'm really on a Martha Stewart kick. I just watched her documentary on Netflix, and I just think that she was so ahead of her time in so many ways. So it would be like a Martha Stewart crypto native thing. Yeah. It kind of goes with the Ethereum infinite garden idea as well, instead of walled gardens. So there's a cute theme there, I think.
Awesome. Rapid fire questions. Favorite food?
Paneer tikka masala.
Favorite musician or band?
Dispatch.
Favorite movie?
Spy with Melissa McCarthy.
Favorite book?
Ocean at the End of the Lane by Neil Gaiman.
And when you're not working at Franklin, what are you doing for fun?
I'm walking my dog around the Upper East Side.
Megan, absolute pleasure. And I love what you and the folks at Franklin are doing, and definitely a big part of the future of how we are going to get paid and much more. And I would love to have you back on in the future. Maybe we can do it in person since, you're in New York. And, but yeah, thank you
That
so
would be awesome. Yeah, really appreciate it. Had such a great conversation, and let's keep it going.